narrative for Hex and Pulse Chain in this cycle, or does it really even need a narrative? Is this market that we're currently in more institutional driven and done mainly by all the smart money, or is it retail driven and lots of the so called dumb money already here? How does Japan and the situation in France play into all of this? Is gold in a bubble reaching the top and now it's gonna pop soon? And then this market that we're currently in, I was told very recently, has plenty of liquidity. Oh my gosh, there's just so much liquidity everywhere. Is that true? I did some research and found some very shocking evidence to the contrary. All of that on today's program. You're watching Reinvent Ideal, and this is Shut the FUD Up. Hello, everybody. Welcome to today's stream. Crypto7, I see you in the chat there today. How's it going, 7? Yes, I told you earlier, I got a lot of stuff here to cover today. And I'll tell you what, it's a very optimistic stream ahead of us, you guys. Very optimistic stream, because I got a lot of good stuff to share with y'all that I think is going to put some smiles back on y'all's faces, because it's been a tough couple of days here. Like today was a tough day. Yesterday was a tough day. And I heard so much despair in the spaces that I was in yesterday. I heard a lot of despair in the spaces I was in on Monday, too. So many people have gotten very nihilistic. So many people are thinking, oh my gosh, it's all over. Crypto's never going to go back up. And Hex and Pulse Chain are just totally doomed and we're never going to have money again. I heard a new real stupid thing that people are saying. Like there was a thing we used to make fun of all the time way back in the old days. Whenever somebody would go, can't the devs do something? We used to make fun of those people who would say that. Well, now we got a new one here where it's like, can't the founder do something? Which is equally as stupid. I mean, you're investing in a coin because you're hoping that the founder does something. I think you're in the wrong investment asset class if that's how you want to operate. Let everybody pile in on here while they're all doing that. We should take a look at the things that I usually start the stream with, the things that are important to all of us. What do we have? Let's see. I bring up that window here. Here it is. Let's start with how's the market doing today? And let me refresh. Not so great, but not as bad as it had been. I think Bitcoin itself had gotten down as low as 121,000. And so far, it looks like all those 4-year fundamentalists are right. The 4-year fundamentalists so far are right, but there's still plenty of time where they can be proven wrong. Because you see, the deal is, what the 4-year fundamentalist belief is that once you have a market bottom, 1,064 days later, you have the new market top, and that's the end of the cycle. Monday was the 1,064th day from the bottom. So Monday, we had a new all-time high of 126,000, and a lot of those 4-year fundamentalists want to call the top right there. Well, hello, Tam Tam and Rich Liberation. Nice to see you guys coming on in. Everybody gather around. So as I was saying, is that, the 4-year fundamentalists, they think that it all ended on Monday, and it's all downhill from here, at least for Bitcoin. I don't know if they think that an alt season is coming. I don't know if they think that there's any alt season coming. We'll see about that. But that's the belief so far here, is that it ended on Monday. But I'll tell you what, it only takes one more new all-time high to prove them wrong. And I saw something from one of the Bitcoin maxis. I mean, I don't like the Bitcoin maxis, but I do listen to some of them. I saw something from the Bitcoin maxis that made a lot of sense to me that I haven't heard from anybody else, and that is new all-time high for the price does not necessarily mean high for the price. New all-time high does not necessarily mean high. Because what you got to compare it to, all-time high, that's just comparing to what it's been in the past. But what you really got to compare it to is, what do the fundamentals say that the price should be? And when we take a look here on CoinMarketCap, they give us some of that here. They give us some of those things to look at with the metrics that they put up recently here, which is the market cycle top indicators. And still, not a single one of them has gone off. So if Monday was the top, well, CoinMarketCap's got some serious explaining to do about all these indicators that they came up with here. Because, if Monday was the top, that means not a single one of these is any damn good. And if not a single one of these is any damn good, well, then how are we ever supposed to navigate these markets going forward? But what is it that we're supposed to be paying attention to? Just the number of days since the Bitcoin bottom? Because if that's all it is right here, I mean, we need a greater explanation as to how it's possible that time tells an asset what to do. Can somebody please explain that to me? I did have the discussion with T-Bird. He didn't really take that approach that time is telling crypto what to do. He's kind of just taking the approach of like, well, it's doing this because it's always done this, and because it's always done this, people expect that, and they're going to behave accordingly. So no shade or anything against T-Bird. We had a great discussion and everything. I'm still just not convinced this 4-year cycle thing, because time can't be telling an asset what to do. It's not a sentient being. It's not a living, breathing organism here that checks the calendar or checks the clock and decides, yeah, I'm going to do something. I'm going to do this now because it's that time of the cycle. Ethereum had been a little bit lower, but 45 is where it's at right now. So not a great price for Ethereum, still 10% down from its all-time high. But really, I think that the all-time high itself is not a great price for it either. We want to see Ethereum a lot higher than this here. We want to see it way past 5,000. There's speculation right now. People think that gold, which just topped 4,000, a lot of people think gold is going to reach 5,000 before Ethereum does. And we've got to talk about that later. And man, that would be an enormous embarrassment for the Ethereum Foundation if that were the case. Like, if that happens, I don't know how Vitalik would ever show his face ever again. Like, a lot of people are hating on Richard Hart right now. Like, he is the big dumb jerk because his coin's prices are down. But everybody gives Vitalik a free pass when he's run the Ethereum Foundation in like the most piss poor manner. They constantly dump on people's heads. He put an absolute bimbo in charge of the Ethereum Foundation who gets up there and says, yeah, we're not too concerned about making sure that the price is high. We're just here for the tech. And that whole in it for the tech thing is actually something we're going to talk about today here, about the whole narrative discussion. I got a lot to say about that. But there's a couple other things I noticed here when looking at the market, guys, that I think will be interesting or of interest to you. A lot of people complain about Hex, eHex in particular, still being down from its launch price. Now, here's the deal. When it comes to launch price, when it first came out, you got it for free, right? Because it was a airdrop. It was a giveaway just for holding Bitcoin. So how do you determine what the launch price is? There was no launch price. If you want to take a look at what it first traded at, okay, yeah, it's down from what the price that it first traded at. And a lot of people are using that as a excuse or a reason to hate on it, to dump on it, and say, oh, this piece of crap eHex is still down from its launch price. Well, what if I showed you that there is also a mainstream blue chip, thoroughly respected coin that is suffering from the exact same circumstances? If I showed you one of those, well, does that change your opinion about whether Hex and Pulse Chain are fundamentally doomed? Because I can show you a mainstream coin that is suffering from that. A mainstream blue chip coin that everybody respects, and a bunch of the mainstream crypto influencers are constantly shilling. I'm talking about Algorand. Because check this out here. When we look at the all-time chart on Algorand, this thing was issued over at, let's see, this is way back in 2019. When it first came out, $3.28. And even as powerful as the 2021 bull market was, and the 2022 alt season, even as powerful as that was, it was not able to get back to its launch price. It only went up to $2.14. And people are still shilling this coin, acting like it's some great thing, this amazing opportunity, which I think it could be, because the price is very low right now. Like if you're buying the price right now at 22 cents, yeah, I think you're going to make money. But it's still down from the price that it was originally issued and launched at. And I don't hear any hate. I don't hear any trash talk. I don't hear any bitching and whining, even from the algo community going, oh, can't the founder do something? I don't hear any of it from that. And I don't hear any trash talk about algo from outside of the community. So Hexicans, shut up. You guys are embarrassing yourselves. Shut up. And if you guys don't know here, I'm actually very angry today. I mean, today's going to be a very optimistic stream. But you know something? Oops. I'm very angry today. I'm very angry today for this reason. I'm so angry that I just knocked over the light. That's how angry I am. Because when it comes to all of the complaining, all of the whining, all of, oh, can't the founder do something and everything? I'm so annoyed, so jaded, so ticked off with it and everything. Because, my God, the whole reason why I started streaming, the whole reason I got in on being an active voice in this community, and I give credit to RH Max for putting me on the map at the very first Pulse Chain conference on his channel. The reason I did is because I was tired of all the damn infighting. I was tired of everybody being so bearish with all your nihilism, all your cynicism, all your complaining, going, oh, we're doomed forever. I'm like, here, I'm going to give you some facts that should give you hope. That's what I was trying to do with that speech at the Pulse Chain conference. Like, hey, guys, you don't need to be bearish because it sucks across the board in crypto right now. But still, everybody was like, oh, and I'm seeing that right now. And I would love to call people out by name. I'm considering doing it, but I don't want to be a hypocrite because the reason I got into this business here is because I was tired of all the infighting. Matter of fact, you know what, Hex, I'm gonna play that clip here.
Hey man, just want to let you know that sometimes you gotta shut the fuck up. And this current time is just one of those times you gotta shut the fuck up. I don't think you're a bad person. I just don't want to hear you talking anymore. You gotta shut up.
Yes, thank you for reminding me to play that. I wanted to play that there. But yeah, there are some KOLs and streamers, influencers, people on, Hex Wizard, you're right, mother fudders on X in particular that are showing up in the spaces and they're just trashing and bashing these projects all day long like it's fundamentally doomed. And I'm like, no, people, no. You all are wrong. I heard a lot of stupid stuff in all the spaces I was in this week. Lots of real stupid stuff being said by people I actually respect. People that I think are pretty intelligent guys. Not people that I would normally throw shade at and say are stupid. But man, I heard a lot of stupid stuff this week. And so that's what today's stream is about, is to debunk all the stupid stuff I heard. NJ Dubs got something here. It says, I understand, but don't really get why, everything else sucks. It's not just us. Would make the community feel better. Well, it's not so much to make us feel better. It's to let you know that what you hold is not fundamentally doomed. And the reason why everything is down right now, like, I'm going to straight out say it here. I mean, like, either the people who are the KOLs and leading the conversation about the overall crypto market and the cycle, either they are incredibly investment illiterate, that's the nicest way I can put it, or they are willfully misleading you. The misinformation, or better yet, the piss information that I have heard this week has been absolutely horrific, like nails on a chalkboard to my ears. Like, do you guys not understand economics? do you guys not understand liquidity cycles? Because when I was in a lot of the spaces this week, I had to put myself on mute. I had to step out to the balcony and I had to scream my rage out because a lot of people are showing me that, yeah, in fact, they really are that dumb, or they're just willfully misleading you guys. So, NJ Dub, what I'm trying to say here is I'm not telling you to feel better just because everything sucks. I'm telling you that your assets are not fundamentally doomed because the whole market is in serious downturn, bear pressure, but the whole market is not fundamentally doomed. The deal is that we have misunderstood and misled ourselves into believing what causes the crypto cycle itself. Everybody thought, well, it's a 4-year cycle. So once it's the 4th year where it should be up only. No, people. That is not how it works. Not how it works. Like, a lot of people want to believe that because it's easy, and a lot of people that come into crypto are flat out beginners in investing in anything at all. And in beginners, they want simple rules to follow. So it's understandable that a lot of people believe that, but it is not that simple. And I will show you, like I've shown on this stream multiple times, that there is a lot more to the crypto market cycle than just time. There's a lot more to it than just where we are on the calendar. So what I wanted to show you here with Algorand is that, hey, they haven't even reached their launch price from 2019. And a lot of people say that about EHEX. Like, oh, you're still down from the launch price in 2019. Okay, that's true. But you know what else? We exceeded that price, though, during the 21 cycle, and Algo didn't. Everybody respects Algo, but they don't respect Hex when Hex just whooped Algo's butt. And this thing is down 93%. That's not supposed to happen in a bull market. I thought we were in a bull market. I thought we were in alt season. Look at Binance. Binance doing so good. We must be in alt season. Oh, no. I've got quite a thing to show you guys today about Binance, about what an absolute scandalous piece of garbage the Binance Smart Chain is. Or maybe I can't really say it's garbage, but let's just say that there's something very scandalous going on with the Binance Smart Chain that's causing that asset to pump. And when I show you this, any respect you had for BSC, you're going to lose all respect for it. Another thing I wanted to point out. Everybody shows you the Hex chart and how, oh, it's down 99%. It had one big pop in the 2021 cycle, and it sucked ever since then. Look at Filecoin. See Filecoin here? I mean, let's see. This thing, it's on its second cycle because it launched very late in the 2017 cycle, like right towards the end, which they learned was a terrible time to launch because it did nothing but go down after alt season died in January of 2018. And then it went down real far. It was down into the, in the bear market of 2018. Its lows were I think that the lows it's experiencing right now are worse than the lows it experienced in the 2018 bear market. That is pretty embarrassing, actually, because the lowest it ever got here in the 2018 bear market was $2.83. It's now trading at $2.36. It had an incredible run up in the very first bull market top of 2021, March 31st, just like a month ahead of the Bitcoin top, the first Bitcoin top in May. And it went up to, it closed on the day at $191, but really its all-time high. It had a candle wick that went all the way up to $237. Incredible. This thing looked amazing, looked unstoppable. And since then, it had went deep down into decline. And now it's really it's at its all-time lows right now. Or its all-time low was actually $2.26. So it's just a little bit off the low here. And when you're looking at it from its all-time high, I mean, like its all-time price is down 79%, but it's from its all-time high, this is down 99%. because we can see that over here on this chart, over here on the far right column. Always turn this on here when you go to Coin Market Cap. Turn on this little thing here, the from all-time high, so you know what you're looking at and you got a good frame of reference. All right. So Filecoin, why do I highlight that? Well, because I keep saying it. Filecoin has everything in the world going for it right now, because what it does is it deals in storage space. We all need storage space, particularly with AI. There's never been more demand for storage space than right now because of AI, and yet this coin that is about dealing storage space and transacting in those deals is down, and down bad. That should tell you something. I got into an argument. It didn't get too heated, but I was in a spaces with some very popular or very well-known KOLs in our own community, and they were all trying to tell me, oh, no, you see, the bull market is right now. It's going on. Alt season is right now. It's going on. And there's plenty of liquidity. There's plenty of retail in here. I'm going to destroy, not just debunk, I'm going to destroy all 4 of those myths. All right. And no, I'm not trying to call anybody out and say, well, I got an argument with this person. Now on my stream, I'm going to make them look stupid. Because the way that worked right here is I didn't really want to argue on the spaces and do all of the infighting that I was complaining about when I first started streaming. I don't want our spaces to be polluted with infighting. And I don't want to come out here and start talking trash about people and making enemies. Because I don't like what's going on when I see this. When I see it, Maddie and Sami are going back and forth with each other right now. I don't like that. We had some clown come into the spaces that Tam Tam does on Tuesdays, and oh man, he was just a cussing machine. I think it was, forget the guy's name, doesn't matter, but he was a cussing machine, and they even called Captain RG3 the C word. And I'm like, bro, imagine new people who've never done crypto or anything, never owned any crypto, but they're in their space, they're in our space. And they're listening to us, and they see a guy like you coming in here, cussing up a storm, and calling people names, especially people who are like veterans of our space, and we're showing those new people just what little respect we have for them, and it's also disrespectful to the new people. So I don't want to do that. I don't want to go out for blood. I don't want to be insulting people. I don't want to be talking trash when, I'll tell you what, if I can get somebody to come on the stream with me that I disagree with, we'll have a civilized debate. We've done that before. I had a civilized debate with Pedro. I had a civilized debate, not so much a debate, a discussion with T-Bird. I would much rather talk to those guys in a civilized discussion on stream to show them my evidence and see if they can weasel their way around it or whatever, or argue their way out of it. I would much rather we do that than have some sort of Cold War going on. All right? Now, here's something else to notice here is like CoinMarketCap does a very poor job of reporting the Richard Hart ecosystem. So to really get the most accurate stuff we can on that, we got to go to gopulse.com. Yeah, I know a lot of y'all don't like GoPulse no more because of their token launch. I don't like that either. But hey, by the way, the whole token launch thing, what that tells you is that we're still in a bear market. We're still in a bear market. Because that's when people launch tokens, is in a bear market because they can't make money from price appreciation of coins that already exist. They still want to make money. What do? They do a sacrifice, and they issue a token. Because like a lot of these places here, the token issuance is just a way to enrich the founders. They will typically do that when there's no other way to make money, particularly in a bear market when you can't make money from just buying a few coins and holding them and enjoying the price appreciation. All right? So everything in Hexaco right now really sucks. Everything in Pulse Chain right now really sucks. But I got to tell you guys here, there's a reason why all of this is. And we're going to get into it. We're going to get into that. I'm going to tell you a lot here about like why everything is sucking right now. Because there are very good reasons that you're not being told. I don't know if people are willfully misrepresenting what's going on or if they just don't know what's going on, if they're just not literate. But lucky for you people, I am very investment literate, not trying to toot my own horn. But I am trying to toot my own horn because you know what? I spent years working in TradFi, and when I worked in TradFi, I sacrificed my social life studying for their licensing exams, studying for their certifications. Matter of fact, I got one right here. I got to cover up my name here so I don't dox myself. Cover up my name and the ID. This one right here. CFP, Certified Financial Planner. Don't get this designation. It's an absolute waste. Don't do it. You don't want to do it, guys. Because that was a whole 6 months of my social life flushed down the drain, studying for that exam, taking the classes and everything. And it was, I don't think it was like, I put more effort into studying for it than I was asked to put into the actual test itself. So maybe it was overkill with the way I studied for it. But I sacrificed a lot to become investment literate, to become economically literate. So you know what? I am going to toot my own damn horn. And I tell you guys are very lucky to have me because I'm so literate, and I'm going to share my literacy with you here. I'm going to explain things for you so that you don't have to get misled by the noise, by the bull crap, and by the outright misrepresentation or the illiteracy of others. Yeah, I'm very angry today. But don't worry, this is going to be a very optimistic stream. CNBC, we do got some stories worth paying attention to. The divided Fed officials saw another 2 interest rate cuts by the end of 2025. Minutes show. Well, we already knew that, so I don't know if that's really a story, but they're probably trying to make a story out of it being divided. It is kind of split right down the center with Lisa Cook being the deciding vote. That's why we really got to get her out. Really got to get that woman out. I'm afraid, though, she's going to be there till at least January. Arthur Hayes says he thinks she will be out before the end of the year. I wonder what he knows to think that, or what has led him to think that. But the Supreme Court says she could stay at her post until the hearing starts in January. And I do think it will go to the Supreme Court. Now, what I do believe is that the Supreme Court will rule in favor of Trump because the Supreme Court, if they stick to the Constitution, well, the Constitution does not give any room to have an independent Federal Reserve. The Constitution says we got 3 branches of government here in the United States. You got the judicial branch, you got the executive branch, and you got the legislative branch. The Federal Reserve needs to report to one of those 3. And since the president appoints the Fed governors, makes sense to have it report to the executive branch. And, it reports to the legislative branch because whoever he nominates has to get confirmed. Don't think we got any other stories here in the TradFi media. Of course not. Nothing to see here. But there is something to see right here. The dollar is getting stronger. Look at this. 98.86 on the DXY. Pesky girl, if you're watching, you asked in a space, what should you look at to see how strong is the dollar? Because if the dollar gets weaker, well, that will make crypto go up, right? Yeah, in all things being equal, yes. Here's what you should look at. You should look at the DXY, the dollar index. The dollar's getting stronger. Well, how is that possible? You keep hearing a bunch of stuff in the financial press and on FinTwit that the dollar is getting weaker, it's getting debased, and that's why gold is pumping, that's why stocks are pumping, that's why Bitcoin's pumping. How about the altcoins? Why are they pumping? Reason they ain't pumping is because the dollar is not being debased and weakened just yet. It will. Now, over the course of this year, it has been getting weaker. You can see here it started at 110 at the beginning of this year. Now it's down to 98.86. But just earlier, a few weeks ago, it was down at 96.55. And now it's up to 98.86. That's a stronger dollar. Why is it going up? It's going up because other currencies are going down. The Japanese yen, I'm going to show you some stuff today. That's going down. We can thank Sine Takaishi, my new love from Japan, who's most likely to be the prime minister out there. Right now, she's just the leader of the Liberal Democratic Party of Japan, which don't get that mixed up. That doesn't mean that she's like a liberal Democrat here in the United States. You see, parties are different overseas. Matter of fact, like parties have been different here, even in the United States throughout history. Like at one point, like at the beginning of the United States, you had two parties: the Federalists and the Democratic Republicans. Believe it or not, they were on the same side once. Like I hear a lot about the Uniparty today. Well, there was a real Uniparty back then, in the early days of America. But the dollar is getting stronger because the yen has gotten weaker, and the euro is getting weaker as well. All right, now I don't think this trend continues for that much longer because the yen's going to get a little bit stronger before it gets weaker, and the euro will be an interesting one because, like, the situation with France is really going to put the Karen of the ECB. When you look at her, you can tell, oh yeah, this is definitely a Karen, Christine Lagarde. It really puts her in a box. We'll talk about that a little bit later. But because the dollar is stronger, much of crypto is down. And you say, well, why not Bitcoin? Why isn't Bitcoin down? Why is gold up? Why are stocks up? There are different reasons for each of those to be up. For stocks, a lot of it is based on buybacks. A lot of it is based on a constant weekly remittance from 401k contributions. Stocks are kind of going to always go up until they hit a bear market just because of that weekly remittance. But also those buybacks, share buybacks is a big reason why the stock market is up. And if we take a closer look at the stock market, really, it's only 7 stocks that are pushing the market up. As you hear about the Magnificent Seven, there's Magnificent Seven and then the S&P 493. Yeah. Interesting thing about the Russell 2000 coming up later, though. Somebody pointed this out on Twitter. Very interesting observation about Russell 2000. What those are much smaller companies, companies that were too small to be included in the S&P 500. Anyways, where was I? Oh, yeah. Gold. A lot of people think gold is up to 4,000 because the dollar is being debased. No, that's not the reason why gold is up. Because the debasement really hasn't even started. I mean, so far year to date, there's been a good amount of debasement, yes. But the real debasement that pushes gold up and pushes crypto up, that's not the reason why gold is up right now, because it hasn't happened. Bitcoin, it is not up because of dollar debasement. In fact, as all of this was going on here, all of this debasement from year to date, all the way up to April 21st, I remember like the first few months of the year, Bitcoin was struggling. It had went from above 100,000 to down below 100,000, like even down into the 70s, or close to it at least. Right now, Bitcoin's not reacting to dollar debasement. I'll show you later today what's causing Bitcoin to be where it's at. Why else is the dollar strong? Because interest rates are high. Now, DXY, remember, this compares the U.S. dollar bills to foreign currencies. As foreign currencies get weaker, the dollar gets stronger. Another thing that determines how much strength the dollar has is what can it earn for you. And right now, with these interest rates being where they're at, particularly the 10-year Treasury, when those interest rates are high, the dollar is strong because the dollar can earn that much interest. All right. And as far as progress on these interest rates, even though we got 2 more rate cuts coming up for the rest of the year, we don't know how much of a dent it's going to put in any of this here in a meaningful way. Like, it is possible that the 10-year Treasury gets to be 3.5% at the end of the year. It's a possibility. But it's one of those things we're going to have to wait to see that happen before, really relying on a prediction of mine coming true on that. Yeah, before we get into today's content, let's just do a little public service announcement. If you want a copy of this book, it's called Your Parents Were Wrong, Debunking and Replacing Outdated Advice. Saw a lot of outdated advice on X this week. Yes, a lot of people believe in some very stupid stuff about economics, about investments, clear illiteracy, and they probably learned it from their parents. No shade on them. I mean, times were different back when your parents were parents, or before they were parents. No shade on them at all. So, you don't want to be operating on wrong information, do you? Of course you don't. So, what you want to do is you want to get a free copy of this book so that you don't operate on wrong information. I'll tell you what information is wrong and what the correct information is in this book. And the way that you get it is you head on over to my Substack right here. It's reinventideal.substack.com. I repeat, reinventideal.substack.com, and click right here where it says free gift. And you sign up for my Substack. It costs you absolutely nothing. All you do is you type in your email right here, and that's it. Type in your email, and you get signed up for my Substack. It costs you absolutely nothing. And you get a free copy of this book because I email it to you. All right. Oh, and by the way, Cindy Lou, if you're watching, I sent in the mail I sent your free copy of the book that we promised you on a Crypto 7 stream. I just shipped it out today. And you should be getting that in like 1 or 2 days. And that's the book, Decrypting Crypto, which I hope you enjoy, and wrote a little message in there for you about it. And really interested to hear what you think about it. All right. So, some things we want to talk about today. The first thing is actually going to be this one tweet from one of our own in the community, Hexy.sui. We want to answer this question that they brought up. So, Hexy, if you're watching, I'm very sorry that I didn't get to this question on the last stream. We had so many technical difficulties just keeping the stream afloat, kept getting rugged. I'm very sorry that we didn't get to this question, or I don't think we thoroughly answered this question at the spaces last night, because it kind of got lost on a tangent and everything. Everybody that got frustrated by that, don't worry. We're going to keep the spaces a lot more structured and organized, and hopefully we're going to have stick on to topic more often. But I don't think that Hexy got the answer to the question they were asking here, because I don't think we really got to the question. So let's just read what's happening here. It all started when Tam Tam said this. She said, X was designed to become the best performing asset of our lifetime, and he will play his hand, he being Richard Hart, accordingly to ensure that it happens. Most lack the patience and conviction. Amen, Tam Tam. That's really all we need to talk about. Good night, everybody. No. We all just believed that was good enough for us all. Then I think that there'd be no need for me to stream. But Hexy responds here saying, you are repeating an old marketing narrative. Now, guys, you're going to learn something about me today. I really hate this word narrative. To me, it's like nails on a chalkboard. And I'll tell you why. Let me get through the rest of this tweet. You have to understand the narrative rather than just repeating it. I mean, we'll pause on that here. I think what Hexy's trying to say is that you should have a reason for investing in the coins. And you should understand the reason you're investing in the coins. And it's not just like it's not just sloganeering that you repeat like a broken record. So you know what, Hexy? Yeah, I agree with you there. If you're talking about like, hey, you should actually understand why you're in the coins instead of just sloganeering, totally agree with you there. It may have been revolutionary for its time, but as new protocols and tech become available, the old fades away. So maybe explain why it can perform better than anything else. Keep in mind that you have to know the ins and outs of other assets to make that comparison, right? So that was the question that we didn't get to in the spaces that I want to get to for you today, Hexy. If you are not familiar with the tech and tokenomics behind other assets, you are in the dark. I mean, I don't think you have to know the ins and outs of the tech and tokenomics of other crypto assets to have a reason to invest in this one particular crypto asset. I don't think that's really the case here, but we'll come back to that here. We'll address that criticism. And Hexy goes on to say, I think the problem with Hex is that it's old tech built on top of old tech. just like a Ford Model T that was designed for to be the best performing vehicle. But when no improvements were made on it, it took a back seat. Crypto has come a long way since 2019 changed my mind. All right, a couple of things. This word narrative really needs to be put to bed because, one, it's a very vague word. And when I ask people what narrative means, I get all sorts of vague definitions that nobody can seem to agree on. I'm thinking it's just something people say when they get asked a question that they don't know the answer to. And so they say something that is sort of specific, but also sort of vague. And it has them walking that tight rope in between the two so they can sound smart. Now, it's just like the Big Bang Theory. You remember that TV show, The Big Bang Theory? That was a show that stupid people watched to make themselves feel smart, and then to show off to all their friends, oh, hey, look at me, I'm so smart because I watched The Big Bang Theory. No, you're not. You don't even get half the jokes. The other thing about narrative is that nobody can seem to agree on what the narrative for a particular coin even is. But the real problem with narratives, if there are any, is that they are extra cyclical. What do I mean by that? When I say something is extra cyclical, what I mean is that it's a reason to invest in the coin outside of the real reason anybody is here in crypto at all. You know why everybody is here in crypto? You know why? To make money. That's the only reason anybody's here, unless you're Fast Abdul. He's always here just for the tech. But everybody else, we're all here just to make money. That's why I got into crypto in the first place. I mean, I used to be a hater. Back in 2017, I was a hater. I thought crypto was a scam. But then when I saw that you could make money, I was like, oh God, you know what? I am going to invest in crypto now, seeing how much money people were making. There's more to the story. You all probably heard that story a bunch of times. I don't have to repeat it. But the only reason anybody is here is to make money. And the reason many of us are here, the money-making narrative that we all know, is the market cycle. It goes down, and then typically 4 years later, it is much higher up from where it was down. That part, that 4-year part, is being challenged right now. Maybe it is true. Maybe the 4-year fundamentalists are right. We'll find out soon. But if Bitcoin posts a new high within the next 3 months, well, then the 4-year cycle, as previously presented, is no longer true. All right? But the reason everybody is here is to make money. The narrative is that crypto goes through a cycle. If you get in and get out at the right times, you make money. That's the only narrative that matters. Anything else that is extra cyclical, perhaps what Hexy means is, why should I invest in this coin here? Like, what's the reason to invest in it? All right. Besides the fact that crypto goes up during the cycle. Okay. If we want to call that a narrative, fine. We'll call it a narrative. I hate the word narrative, though. It's just, I hear the word so damn much. It's just so damn annoying because it just sounds like something people say just to sound smart. But okay, we'll call it one. And in the spaces last night, people were throwing a whole bunch of stuff on it, like, oh, it was a blockchain CD, which I never bought for a second. I mean, for one thing, back at the time of the 2021 bull market, I was working in the, well, I'd just gotten out of the bond department, actually. But a big part of working in the bond department at Fidelity was selling CDs. And I hated CDs with all my heart. Hated them. Not that there's anything wrong with CDs, but I hated the people that invest in them. Because it was always some dumb neophyte technophobic boomer calling up, wasting our time, taking me away from the ability to do profitable sales calls, asking me to place a CD trade for them. All because they were too dumb or too lazy to go on the website and place the order themselves. So that's why I hate CDs. But I don't remember, though, back in the 2021 bull run, anybody saying, yeah, I'm going to invest in Hex because it's like a blockchain CD. I don't remember that. Anybody else remember that? I mean, was that the case for anybody else there? Bass says he prefers 8 tracks. Like, was that a reason for anybody back then? Or did you hear anybody back then say, yeah, I'm invested in Hex because it's a blockchain CD? I don't think so. I mean, I did hear some stuff that is used to like justify the investment. Like, well, it's trustless yield. It was designed to do a 10,000x. I've heard a lot of stuff like that. Yeah. But I think the main reason people got into Hex was to make money. And people were looking to make money in crypto in general because we all understood it goes through a cycle. All right. And even back then, there was a lot of argument about the cycle. I remember in 2021, a lot of arguing about when does the cycle stop? When does it start? When does it end? Some people were thinking Bitcoin was going to go to 100,000 in that cycle and everything. So this argument that we're having about the 4-year cycle right now is nothing new. Yeah. But what I remember is that people bought whatever it was that they bought just to make money. That's all it was. That was what attracted people to cat NFTs. That's what attracted people to scam coins. That's all that reason like why people bought Shiba Inu was just to make money. That's it. They didn't have a reason to justify it. So narrative or like marketing, sloganeering. Personally, I'm against all of this crap. I'm against all sloganeering. I'm against all catchphrases, taglines, elevator pitch. And that's because I'll tell you the reason like why I invest in Hex, Pulse Chain, or really why I invest in any coin at all. Because it's the same reason for every coin. Well, slightly different for each one. But overall, it's the same reason why I invest in every coin. I don't care about narratives. It's just sloganeering. All right. And when it comes to what Hexy is saying about old tech, they say, hey, like Hex is old tech built on top of old tech, Ethereum. Why is this going to do any good? Why do you expect the price to go up when it's all old tech? I'll tell you why. Because you know what crypto asset has gone up the most? You know what crypto asset has had has the highest market cap, the highest price appreciation? Bitcoin. The oldest crypto asset with the oldest tech is the highest priced. No problem at all with Bitcoin's not even good tech. It's spaghetti code. It's had 2 inflation bugs. Eric Wall built some NFTs on top of it, and all they did was lose money. And Bitcoin DeFi is a joke. And when you try to sell or exchange or transact your Bitcoin, it takes 2 hours. So this idea that we have to be good, new, fancy tech to go up is just not true. All right? And it's not true of anything, and not just here in crypto, but in a lot of places here. It's not true. I mean, I do not buy cars made after 2020. The reason why I don't buy cars made after 2020 is because I don't want to be nagged by my car, because those cars got so many alarms that are constantly binging and bonging and dinging and going. Like, I didn't get married for a reason, because I didn't want to be nagged all the damn time. So all you boys out there that are afraid that you're not going to get married because of the demographic statistics and the fact that the girls these days just ain't that interested in dating and getting married, don't worry. You can get married, or you can at least simulate a marriage. Just buy yourself a new car made after the year 2020, and then you'll get the marriage simulation of a wife nagging you, because that's what your car is going to do. It nags you to put on your seatbelt. It nags you when you get too close to the lane next to you. It nags you when you leave your groceries in the back seat. I'm not making that up. That's really a thing. Apparently, like, somebody left their baby in the back seat of the car and forgot. All right. So you don't need new tech for the price to go up. That's what I'm really trying to say here about that. Do we need a marketing narrative for the price to go up? I would contend no. We don't need a marketing narrative. It's all just sloganeering, and we're better off without that. I did. There was some more questions here from Hexy that. Let's see. Where did they put them? Where is it? All right, guys, I'll be more prepared here. Oh yeah, I definitely wanted to talk about this here. I got a very extreme claim here to make that I'm sure is going to garner lots and lots of disagreements, and maybe I'm going to be ridiculed and laughed out of the building here when I say this. But now is the time to make those bold claims. Of course, I think that a lot of times the bold claims you make, no matter how ridiculous they are, they get forgotten about months later. Remember when Balaji said that Bitcoin was going to go to $1 million by June of 2023? All right, here we go. I found Hexy's other questions here. Maybe we can answer these together, guys. Yes, Hex Wizard, I should say that to my car, but my car doesn't nag me because it was made before 2020. All right. What should I say to everyone that nags me? I should say this.
Sometimes you just gotta shut the FUD up.
All right. Yes, let me share the screen here with everybody again. This is what else Hexy had asked here. Tell me why new users would choose Hex with 7% yield over everything else on the market. Native staking gas coins can produce same yield with more probability of price appreciation. Tell me how Hex will appreciate without RHUs and SAC funds, because that is the... Oh, they really wanted to emphasize this. That is the only way it will perform. You guys know that? Hex is not going to perform unless RH uses the SAC funds. How do you come across that information? Where did you acquire this knowledge? Tell me how it is less risky, being that one person owns 95% and can manipulate the yield with one click. Oh man, I forgot to get the chart that I wanted to answer that question with. I had a chart. I'll have to dig it up later. But let's see. We'll take these on one at a time. So, why would someone choose Hex with a 7% yield over everything else in the market? Well, I don't know what is that true? Anybody know? Is that true that Hex yield is 7%? I thought it was lower. But I'll tell you what. If it is true that it's a 7% yield, that is a lot higher than what I saw on some other chains. Because what's the yield on Ethereum staking? What's the yield on Cardano staking? What's the yield on Polygon staking? It ain't 7%. What's the yield on Sonic? That one I do know off the top of my head. It's only 4%. Sonic, another L1, which is a pretty good chain. I'm not saying it's the best chain, but it's a pretty good chain. It's a very thoroughly worked out ecosystem. It's got a lot of cool projects on it. I like it. It's one of my biggest bags. But I don't stake on it no more because the staking is just 4%. It used to be 10%, and I was happy with that. Now it's down to just 4%. So now I'm not locking up my coins on that. But here's another thing about Hex staking. That is not true on other chains. Everybody know this little phrase, this little acronym or abbreviation, TVL? Total value locked. Is the value really locked when it comes to TVL? No. I don't know why it says total value locked when it's not really locked. I mean, I can move my money off the chain anytime. When it comes to Sonic staking, there is like a little bit of a locking mechanism on it. Like you start your stake, you can end it anytime. You can end it 5 minutes later, but once you do, your coins are stuck for the next 2 weeks. And then when the 2 weeks is up, you can take them back. All right. So that's as close to actual locking and staking. Most of these other chains, though, they may have similar waiting periods to withdraw your coins, but none of them have what Hex has, which is when you commit to staking, well, when you set the time frame, and you will honor that time frame, because if you don't, there will be severe penalties. Any other mechanism, any other staking protocols out there that are like that, where it punishes you for not honoring your word and rewards everyone who did? Because you see, the whole point of financial markets is to transfer money from the impatient to the patient. To transfer money from weak hands to strong hands. We have seen a lot of hex stakes get nuked lately, or get emergency end staked or halted. Where does all that hex go after that happens? I mean, does it just all go down the drain? No. It goes to the other stakers, the people who remain faithful, the people who have stronger hands because they're willing to keep this coin, keep their stake, and commit to the time frame that they agreed to hold it when everybody else is bailing out just because the price is down. I mean, it makes no sense to me why people are emergency end staking. Like, oh my God, the hex price is down. We need to sell all of our hex. We need to emergency end stake it. Okay, well, you emergency end stake it. One, you're not getting all your hex back. Two, when you do the sale, you're pushing the price down. Three, why should you care that the price is down while you're staked? Because the understanding was when you set the stake at the beginning, you agreed to the fact that you weren't going to take this money out for X number of days. You admitted you didn't need the money for the X number of days, so why is the price causing you to emergency end your stake? Makes no sense. All right, so as far as like the yield being low compared to where it was before, I mean, yeah, that's true. The yield's lower now than it was before. But if you're just chasing yield, I mean, when I was in the bond department at Fidelity, this was the thing. People were chasing yields. The people who did that ended up losing more money than they ever would have made had they just stayed put. Or they ended up losing more money than they were ever afraid, than the amount of money they missed out on by not chasing yield. They say, well, I don't want to miss out on these yields over here, so I'm going to go chase them. And chasing them, you lost money trying to get that yield when you could have made a decent, respectable amount of money just staying put in the bonds or the CDs that you bought and just held on to them to maturity. I hope that made sense. So yield should not be a reason you stake. I mean, it's a good reason when the yield is high, yes. I can understand, like, yeah, you're attracted to the highest yield, but that's a game that has lots of competition, and really it ends up being a race to the bottom among all the chains of like, oh, we offer the highest yield, come stake with us. I mean, anybody can win that game. Anybody can keep kicking it up higher and everything. But what you got to remember here is, like, for one, when they quote a very high yield, something fishy could be going on. Remember Luna? Remember when they promised on your UST 20% for life? And a lot of us at the time were saying, hey, that can't be right. But then everybody else was saying, oh, no, it is right. It's 20% for life. They were just so hypnotized by the yield. So don't let the percent or the APR be what attracts you to staking, because one, the yield's not even fixed. Yield can change all the time, even while you're staked. The reason you want to stake is to protect yourself from yourself. That was the whole point of the staking mechanism in Hex. Well, that's part of the whole point. It was to protect yourself from yourself. Like, hey, I know I can't handle the volatility of the market, but I do think a year from now it's going to be at a higher price. So let me stake it now to make sure that I can't screw myself over between now and a year from now. Another reason was that you wanted to get more Hex. That was the reason to stake, but not just getting hexed in like the promised yield of 3.69% is the minimum, because that's the inflation rate on Hex. The 3.69% that you get that's just bare minimum rewards. But like what you really wanted was you wanted to get the hex of all the people that emergency unstaked. I mean, what makes me really happy is knowing that there's one, I'm not going to name his name, but there's one douchebag out there who caused a lot of drama in our community. I'm very happy knowing that my stakes in eHex are being rewarded with his emergency end stakes. All right? Because you see, the reason you stake is to uphold the price. You're being paid additional hex to secure the price. That was the other point for why the staking mechanism was created, to help the price. All right? And also, when other people cheat out, it rewards you. You see, when you keep your hex liquid and other people cheat out, that punishes you. The cheats are punishing you. But when you're staked, it rewards you. Right now, we got a lot of cheats, a lot of douchebags in our ecosystem that sell on every pump, or they were worse than Bank X. Everybody was afraid of Bank X, but Bank X actually was not that bad. Now we got a lot of douchebags that are constantly cheating out. Well, do you want to be rewarded for their idiocy? Stake your coins. All right, the next question that they asked here is, tell me how Hex will appreciate without RH using the SAC funds, because that is the only way that it will outperform. Y'all agree with that? Y'all agree that that's the only way it's ever going up? Yeah, and guys, if you've got questions, don't worry. I'll go through the chat at the end here. All right, I'll go through the chat at the end if you want. I got questions you want me to answer. But is that really the only way that Hex goes up? Because we've seen some pretty nice price appreciation. Well, until the Jeets had their way with it, but we saw some pretty nice price appreciation from eHex without any SAC funds being used. Hell, we've seen the entire ecosystem go up without any SAC funds being used. I mean, let's take a look here. Let's see, is it? Let's show that. Let's just go back looking through some history of the entire ecosystem. Let's look at Pulse Chain itself here. Pulse Chain is the L1. We should be able to kind of like see from it how the market, like the overall market kind of leans in its direction. Like whatever Pulse Chain does, you could bet the other assets are going to do something similar, right? Look at this. This was, let's see, after the Gensler candles. Gensler candle was right here. Or not right there. Where was it? Yeah, here's the Gensler candle. Because I remember it was last day of July 31st. All right. Still, before the year was up, we got half of that back without any SAC funds being used. That might have been like, yeah, that was before they used any. Then there was this point right here where some SAC funds were being used, because that was when, one, Richard announced his counter to the SEC. A little bit of SAC funds were being used. But then look at the rest of these candles here. Like, yeah, we had some Jeets. Then we had some people buy from the Jeets. Then we had some more Jeeps. Then more people bought the dip. Some more Jeets. More people bought the dip. Some more Jeets. People bought the dip. And that's what got us all the way up to almost 0002, which was higher than the SAC fund, the SAC price. Or that was higher than the launch price, at least. That was the all-time high on Pulse Chain. And we didn't have to have the SAC fund, the SAC wallet push us all the way up to that. Or how about later in the year? Like in July, we had some nice green candles there. But really, the big one was this one right here. From the month of November all the way to mid-December, till the Interpol candles occurred, we were going up just fine without any SAC funds being deployed. We almost got up to 0001. We were very close to it. And this was Pulse Chain. The other assets were going through similar candles at the time as well. Look at Pulse X. Look at this, exact same thing. Yeah, here in March of 2024, it had a pop. And then again in December, it had a nice pop. And it even had some pops here in February and March when everything else was sucking. I think those pops was from, like in February and March, those were from the SEC case getting dismissed. Let's take a look at P-Hex itself, pulse chain hex. Like we're all familiar with the E-Hex chart. Let's take a look at the pulse chain hex chart. Exact same thing. All right. In April, or not April, March 2024, we had a nice hit. And then again in December, had a really nice hit here. There was no sacrifice wallet purchases in those two peaks. You're telling me that we can't have another? I mean, you got to remember, quantitative tightening was much harsher back during these two times than it is right now. Now that the quantitative tightening is less harsh, you telling me we can't have a repeat at least of this? I think we could do a lot better here. Because the all-time high on Pulse Chain Hex was 3 cents. A little over 3 cents. I mean, I think we could get back to 3 cents in one day when we get the conditions right. All right? So I disagree with the premise there, Hexy, that we have to use the SAC funds to get performance on any of these assets. Totally disagree with that. Also, here's another thing. This whole, the founder has to do something. To me, this is just another version of, can't the devs do something? We all make fun of the dev. We all make fun of that. The people that say, can't the devs do something? We make fun of them. Because we all know, no, the devs can't do nothing. But now we got, can't the founder do something? What do you think he is going to do? Well, he's going to buy the assets with the SAC funds. Okay, so he buys the assets with the SAC funds. He depletes the entire sacrifice treasury. A bunch of Jeets sell it out. And then what happens after that? Does the whole chain then just die? I mean, you gotta remember, what's in his interest is protecting the chain. That's why he took down a lot of the yield on the incentive token, because people were just getting the incentive token from the farms and then immediately selling it and extracting the money off the chain. It was a net value extraction. So why do that right now? Especially right now, when quantitative tightening conditions are still bad. And I'm going to show you later on in this stream here that we are not, I repeat, we are not in a bull run. Not in any way, shape, or form. And I'm not talking just Pulse Chain. I'm talking crypto entirely. The whole damn crypto market. I don't give a darn what you have heard or what influencer has said this. I know I'm going to get run up the flagpole for this. I don't give a damn because I know I'm right. We are not in a bull run. What we are in Pulse Chain, we're still in the bear market. Bitcoin, you know what Bitcoin is in? Bitcoin is in a bear market rally. That's what Bitcoin is in, and I got some data to prove my point. Thank you. Tablerus has got something to say about this here. What do you say here, Tablerus? Says, the irony is RH would only pope the ecosystem after the market starts pumping on its own. He's not going to randomly do it while everyone wants some money to cash out. He has to wait, and he has been. That's the thing, you guys, is that there's a reason retail is not here. I've got figures to show that retail is not here. All right, I got ran up the flagpole in one of the spaces for someone saying, oh no, retail's here, Cairo, you're stupid. But no, I got the figures on my side. Retail is not here. There's a reason retail is not here. And the reason retail is not here is because right now the economy sucks. The economy really, really sucks. How bad does it suck? Here's how bad it sucks. Hot girls are in eviction court. That should not happen. I should never see hot babes in an eviction court. I should never see hot babes getting foreclosed on. Because you all know the deal. There's lots of simps out there. There's one little online money-making opportunity that hot girls can do and make a lot of money doing it. When there's no money to go around even for that little activity, you think the economy is good? Guys, OnlyFans models are not making money. That's a sign the economy is not in good shape. Because when the economy is in good shape, the simps have money and they got money to piss away. And what do? They piss it away on OnlyFans going, oh, if I just send her another $100, she'll like me a lot more and maybe agree to meet me in person, right? The economy is in real piss poor shape for most people. I mean, look at how bad the job market sucks. And look at, even if you got a job, life still sucks because it doesn't pay you much. So people don't have money to go buy crypto with. If he deploys the SAC money into these assets, of course people are going to sell. Because right now people are struggling just to make ends meet. And also think about this here. What is the point of the whole sacrifice where we all sent money to Richard Hart just for him to do what? Just to send it back to us? What then is the whole damn point? Why even do this? We should have just all kept our money the whole damn time? Are we seriously gonna run the exact same model that Washington, D.C. runs with taking in tax money, extracting money from the private economy just to send it right back to where it came from? No. All right. And also, him deploying the SAC money right now, wouldn't that just be an admission of failure? Yeah, nobody wanted my chain. And because nobody wanted my chain, I had to pump it myself with the SAC address wallets, or the SAC wallet money. And that's what I had to do. And that represents the 3-year life of my Pulse Chain project. You think he wants to go down that path? We have seen in the past that this chain, these assets can pump without any sacrifice wallet intervention. There's no reason it can't happen again, all right? The only reason I think it will ever happen, that there will ever be any SAC money spent to buy the coins on the chain, is in this one circumstance. Say, Pulse Chain Hex is the number 2 most appreciated asset in the coming bull run. It's right behind, Sui, all right? And it's neck and neck for which one is going to be the number 1 appreciator of this cycle. In that case, I see Richard taking some SAC address money and doing it just to have the bragging rights that he had the number 1 coin of this cycle. That's it. All right? So I don't think that we need any SAC funds to be spent on these coins for him to pump at all. I think that when the bull run gets really going, when it's running on all 4 cylinders, it's only running on 1 cylinder right now. Those of you who tune in regularly know exactly what I mean, exactly what I'm talking about. It's only running on 1 cylinder right now, but when it gets on all 4 cylinders, every coin is gonna pump. And what makes some coins pump more than others? You want a narrative? I'll give you a narrative. The liquidity on Richard's coins is a lot lower than most others. All right? The liquidity is much lower. Tell me how it is less risky, being that one person owns 95% and can manipulate the yield with 1 click. Well, first off, are there a lot of other coins out there that are not top heavy? Is there a lot of coins out there that have a very wide distribution of ownership? No. Most coins are very top heavy, where the top 10 or the top 20 wallets own the majority of the supply. That's a risk that we face in many coins, and they all still pump. And Binance in particular is a very top heavy coin, and it's not hurting Binance right now. Because you see, here's the deal with Binance. Why is it pumping right now? Everybody wants to point to, oh, look at Binance. Because it's Binance is up, that means we're in the off season, and that means that the 4-year cycle is still 2. That means you're wrong, Cairo. That's what they're all saying right here. But no, the reason Binance is up is this here. Every single transaction that ran through their exchange, they collected fees on in the form of the coins being transacted. So if you spent a little bit of USDC to buy, say, SUI, they collected both a fee on the SUI portion of that transaction and a fee on the USDC side of that transaction. They shaved off a little bit of each side and sent those coins to the war chest for Binance, or the main exchange address, main exchange wallet. All right. Binance took a shred of each one. Now what Binance is doing is they're unloading all of the fees that they collected in all the different coins and sticking that value into BSC, the Binance Smart Chain token. So the reason Binance is going up is that it's going up at the expense of every other coin out there. It's just pure extraction. It's not natural organic demand. So no, we are not in alt season and we are not in a bull run. These are all just bear market rallies. And if you understood what causes bull runs, if you understood what guides and governs and drives these cycles, what causes the cycle, if you understood that, you would know we're not in a bull run right now. You would know. Because you'd have the information, have the knowledge inside out to be able to determine, well, when are we in a bull run? When are we in a bear market? How do you make that determination? What causes bull runs anyway? Wouldn't it be great if there was a book that told you exactly that information? Wouldn't it be great if it was written in a way that made it easy to understand with colorful analogies that anybody would get? Well, yes, there is a book. In fact, let's run the PSA for it right now. Why does crypto suddenly explode into unbelievable bull runs, only to crash just as fast? It's not luck. It's not random. It's macroeconomics. In decrypting crypto, you'll uncover the hidden forces driving every major crypto rally, forces tied to the global debt machine, central bank liquidity, and repeating market cycles. This isn't another blockchain basics book. This is the blueprint Wall Street doesn't want you to read. The playbook that shows you why crypto moves when it does, and how to spot the next bull run before it starts. Don't miss the next cycle. Read Decrypting Crypto. Arm yourself with the knowledge to ride the wave before it leaves you behind. Decrypting Crypto by Cairo Code. Available now on Amazon and Audible. I'll give you the most Cliff Notes abbreviated version of what is thoroughly discussed in that book. Even though I want you to buy it, I'll still tell you what causes these bull cycles. And that's this. What causes any coin to go up? You want a narrative, Hexy? This is the only narrative you need. What causes any coin to go up is money printing. Money printing is all that matters. Well, it's most of what matters. I don't want to say it's all that matters, because here's like how it really works, right? 90% of all price appreciation in crypto is because of money printing and growth in global M2. 90%. The other 10% are all the narratives and sloganeering that you all want to make a big fuss out over that I say they don't matter. All that sloganeering crap that I got lectured about in all of the spaces earlier this week, that only accounts for 10% of the price. 90% of the price is determined by money printing. Why do I say 90%? Because if you run a regression, a linear regression for global liquidity and the crypto market cap, you'll see that it has an R squared of 0.9. That means 90% correlation, direct relationship. All of its price fluctuations, the booms and the busts, are in line 90% of the time with global M2 expansion or global M2 contraction. Yeah. But there's also a structural upward bias from endless debasement. As the M2 expansion goes up, like a lot of that M2 expansion is permanent. I mean, yeah, there's periods where it contracts, but it doesn't contract anywhere near as much as it expands. So 90% of all crypto price appreciation, what guides and drives the cycle, is global M2 growth, expansion of the money supply. The remaining 10%, all that you can say that's the alpha from crypto-specific drivers like Metcalfe's law, network adoption, where the value scales as the users are squared, and that causes some more exponential price growth. Tech breakthroughs, maybe. Narratives. But liquidity amplifies it, all right? Quantitative easing is the rocket fuel that makes crypto do the exponential gains that it does. All right? In fact, when looking at Ethereum, it's the same thing. They call it the Ethereum liquidity correlation. Total global liquidity, global M2 growth. When you do a regression, or like a regression comparison between Ethereum and total global liquidity, it has an R squared, meaning a correlation of 90%. So that's all that matters. Right now, the economy is not running on all four cylinders, and I mean the world economy. World money supply is not growing that fast. It's growing a little bit, but not that fast, because only one of the four major central banks is printing, and that's China. There are four major central banks. When they measure global liquidity, when they measure global M2, they pay attention to what the four major central banks are doing. The Federal Reserve, the ECB, the Bank of Japan, and the People's Bank of China. Right now, only the People's Bank of China is printing. They're the only ones doing quantitative easing right now. The other three banks are tightening. The other three banks are letting their balance sheet run off, and that is the opposite of money printing. In fact, let me show it to you here. I've shown it to you all probably 1,000 times, but I will show it to you again here. Fed balance sheet trends. Let's see. It's always a week behind, but still it's good enough to see. One of these days, I won't have to do this. One of these days, Cairo's Law, that's what I call it, Cairo's Law, will be so commonly known and accepted, they might even teach it in schools, because it is, without a doubt, 100% doggone true. There is no questioning it. Take a look at this here. The Federal Reserve's balance sheet is decreasing. That is called quantitative tightening. That is the opposite of money printing. That's what's happening here. Because you see, what's happening here is the bonds that are on the Fed's balance sheet are maturing, and as those bonds mature, the Fed gets the money back, the maturity principal, and the final interest payment. It's extracting money from the economy, from the U.S. M2. And the Federal Reserve is so important because the U.S. dollar bills are the world reserve currency. So when the Fed does the opposite, when they start printing money through quantitative easing, that is far more powerful than any of the other three banks. So right now, the economy is not running on all four cylinders. It is only running on one cylinder. Can you push a car when it only has one wheel? No, you need all four wheels. Oh, that's what's going on here. That's why we're down. And we're going to continue to be down until this reverses. I know this is a very unpopular opinion of mine, but I don't think that the reversal happens until June of 2026. And I've given my reasons a bunch of times for why I think that is. And I'm talking specifically about the Federal Reserve with that. Now, good news. How about some good news? Everybody ready for some good news? Because there's some good news out there. The good news is, I think the other two banks, Bank of Japan and the ECB, start printing money before we do. Why do I think that? Well, a couple of reasons. Let's see here. Let me dig them up here. Oh yeah, here's where I got the idea that Bitcoin is just in a bear market rally. That's not from me. You know where that's from? It's from one of the most unlikely of places ever. Peter Schiff. Here's the deal. Peter Schiff is a Bitcoin hater. He hates Bitcoin. He thinks it sucks. But even he's saying, yeah, you're not in a bull run, you guys. Talking to all of the Bitcoiners out there, say, yeah, Bitcoin's not in a bull run yet. Bitcoin is actually in a bear market right now. And why does he think that? Because if you price it in gold, Bitcoin still has not exceeded its previous bull market high. Guys, we should be happy right now. We should be joyful that we're as high as we are right now when we're not even in a bull market and only one central bank is printing and pushing prices up. We should be happy because when all four cylinders are firing off, when all four banks are printing, my God, can you imagine how powerful the price action to the upside is going to be? It's going to make what we're going through right now look comedic. So Bitcoin's biggest hater, Peter Schiff, says, yeah, I don't like Bitcoin, but I do think it will have a bull market. Right now, it's not in the bull market. It's in a bear market rally. And you're bearish? And you think the cycle's all over? What in the name of hell is wrong with you? Gotta calm myself down occasionally right here because I don't want to cuss on this. I don't want to cuss on this YouTube channel. Like I just got monetized on YouTube, which I'm not really trying to make money off of this here. What I'm trying to do is I'm trying to get more exposure, and if you're monetized, you get more exposure. YouTube pushes you out in the algorithm a lot more. But what I'm trying to do is get more exposure and trying to cut down on the cussing so that more people can listen. Because some people are watching with their kids. Or listening with their kids in the room or in the car. And I don't want to be like one of those channels that they can't do that with. Because it's important that the information I'm sharing with you all gets out there. So this wasn't what I was looking for. Was it this? What else was I looking for? But that's one thing. If you price it in gold, Bitcoin is still in a bear market because it hasn't surpassed the previous. It hasn't surpassed the previous bull market top. Okay, here's what I was looking for. Yep. The other money printers are going to get turned on pretty soon here because check this out. The French government collapsed after just 27 days. The recent prime minister, President Macron, Emmanuel Macron, he works with the prime minister. He's not like the sole authority himself, but when a prime minister is installed, because it's a bit of a parliamentary form of government out there in France, when it's installed, they got to work together. Well, because the finances in France are so out of whack and they suck so bad, the people in the people that have been holding the seat of prime minister, I forget the last guy's name. I forget what his name was, but one just resigned a few days ago. And that's actually the third prime minister to resign from France in the last 12 months. Imagine if this happened in the United States. If we had a president and within 12 months, the president resigned, and it happened 3 times within a year. That would be chaos. It is chaos out there in France, you guys. And why should you care? Because France is one of the biggest members of the European Union. One of the biggest members of the Eurozone. The Euro, the ECB, has been doing quantitative tightening this whole time, and they've been trying to force austerity on France. But France is not going to go for that. In fact, it's possible that France is going to withdraw from the European Union. If they withdrew from the European Union, oh my God, the euro is toast. The euro will come crashing down and get extraordinarily weak, even without the money printer going. And because it's extraordinarily weak, that makes risk assets, or not even risk assets, that makes crypto assets particularly valuable because it's a store of value. Like if you got a ton of euros in even not even a French bank account, but like a German bank account, you got a ton of euros there, and you know that the euro is about to take a giant dump, what would you do? I'll tell you what I would do is I'd take all those euros and I'd stuff it into something like Bitcoin. I'd stuff it into a crypto asset that I can easily transfer out of the country, because the whole use case of crypto right now is that it's borderless money. I can transfer $10 million out of Europe and into the United States without any trouble at all. Just got to have a Trezor, or I don't even need a Trezor. I just need a wallet address with the seed phrase memorized in my head. I can do that without any trouble. I cannot transfer 10 million worth of euros from Europe to the United States without running into several checkpoints and experiencing hassle after hassle after hassle. You can't transfer $10 million worth of gold from one country to another without experiencing a lot of hassle, a lot of struggle, okay? So this is one of the biggest stories going on right now, which nobody in mainstream crypto is talking about. If you listen to any mainstream crypto influencers, you need to get on their butts about not covering this story, all right? You got that idiot Ivan on Tech who goes, "Pussycats, why is your coin down? I don't understand why your coin down. But you know, we're in a bull market. Well, all this fugazi going on. We're in a bull market because Binance doing well and Bitcoin doing well. So you publicans should be doing well." That imbecile is not talking about this story. I seriously doubt those two dumbasses over at Piss Cover Crypto is talking about this story. I'm talking about DZ the dummy, who on every single thumbnail, he makes the same stupid face. Just I want to punch him in the face every time I see that thumbnail. And that other little idiot, Joshua Fake, who does not know a darn thing about crypto. He's a very stupid boy. An incredibly illiterate boy, that Joshua Fake. Zero respect for him. I don't hear this on Wendy O. Wendy O, I like you. I respect you. Why don't you talk about this and the implications that it has for the overall market? I don't think I heard this on Randy Hipper. Might have heard it mentioned in passing by Lark Davis. I definitely didn't hear it from George over at Cryptos R Us. All I hear him say is, "Welcome to Cryptos R Us. I'm George. We're all George." The only talking point he has is, "Remember that dips are gifts." That's all George ever says. Dips are gifts. And I definitely don't hear this being talked about on Rand Nooner with his stupid Bullwinkle voice. "Hey, you guys, we're going to talk to you here about all these coins that I see on the bubbles right here. Let me just click out of this Hex bubble and this Pulse Chain bubble because I don't want that. But let me take a look at all these other coins down here." For God's sakes, he sounds like Bullwinkle whenever he talks. How about you put that Bullwinkle voice to talking about this story, one of the most important stories in the whole world economy? "Oh, well, I don't cover politics." It's not a political story, it's a financial story. So, because France is in severe trouble, likely to collapse, they're too big to fail, but they're also too big to bail out. This is going to lead to either severe weakening of the euro by itself or severe weakening of the euro by money printing done grudgingly by the Karen of the ECB, good old Karen Christine Lagarde. That should be her new name, Karen Christine Lagarde, because you take a look at her, she definitely looks like a Karen. So there's one other bank that's going to start money printing or something close to it. I think what they're going to use is what's called the oh man, I forget the name now. Like the TFI. There's a specific word for it, like the TPI, the Transmission Protection Instrument, because it was made specifically for the French situation, or situation like the one France is going through right now. How about some more good news? You guys ready for some more good news? Because, man, I got a lot more of it. Got a lot more good news here. Y'all hear what's going on in Japan? Did you see my last stream? Yeah, my last stream. I'm going to flirt with and hit on the new prime minister that they're about to have, Takeshi, Sine Takeshi. I think she's actually kind of cute, actually. Matter of fact, Takeshi, I'm going to take one for the team here. I will gladly give you a lap dance and a pole dance, and I will strip for you if you turn on the money printer over there at the Bank of Japan. Here's what I'll do for you. Come on, Takeshi. You know you want some of that, right? You want that big, muscly, sweaty body all over you, lap dancing on you, don't you? I think you do. All you got to do to have that body, honey, is you just got to turn on the money printer there over at the BOJ. But you know what? I think she might have actually done it already here, because check this out. When she got elected to Liberal Democratic Party leader, before it happened, well, the Japanese 30-year bond was down here at 3.15. Then it spiked up almost a whole, it was a whole 20 basis points to 3.35. And that doesn't sound like a lot, but guys, I'm telling you, when you're talking about yen, those basis points is a lot. Those basis points might actually be a couple quadrillion yen. And also, like, the yen deals in trillions regularly because it's so devalued. And the real big numbers with Japanese yen is actually in the quadrillions, because the quadrillions is like where you're moving massive amounts of money just because the yen is so darn devalued. So it spiked all the way up to 3.35, but then 2 days later it came back down to 3.15. How does that happen? How do you do that? What happened was the Bank of Japan stepped in and bought some of those bonds that spiked up, taking them off the market. That's what I think happened. And I don't know how else you do it here. Well, this tweet here should tell us something. It says, I can't read Japanese, but what it says here is that the Bank of Japan started doing yield curve control. And with yield curve control, all that means is they're trying to get the low end of the curve, the short-term bonds, to be lower yields than the long-term bonds. But also, they don't want the long-term bonds to be too high yield either. You want a steep curve, but you don't want high yields on either side, because then that just makes the government go deeper and deeper into the national debt. So what they're saying here is that the banks wanted to unload their bonds by selling them to the BOJ, the Central Bank of Japan. And they offered 3 times the amount of bonds than the BOJ was willing to buy. The BOJ just bought $1 trillion worth, or not $1 trillion. They bought 1 trillion Japanese yen of these bonds. So that was 1 trillion Japanese yen that just got printed in 2 days. This is really good, guys. Hopefully it's the start of something. Now, what I do think is going to happen is that the BOJ will raise interest rates by 25 beeps, because they got to show off to the world, and they're going to do that this month here in October. They got to show to the world that they're not going to get crazy. Even though Sine Takeshi wants to be like a super pro-stimulus person and is got very dovish monetary policy. Even though she's that, she doesn't want to make the world think that she's crazy. All right. Hopefully, I can drive her crazy with my awesome dance moves from my stripper days. But she doesn't want anybody to think she's crazy, so they're going to do a little token 25 basis point raise at the next central bank meeting. But you can see right here, Japanese yen and the 30-year Japanese bond, they are being put to the test pretty bad right here. I mean, like, this is the exchange rate, I think, on the Japanese yen, right? Is this the exchange range? Or it's just like what the yen, what the yen's purchasing power is right now. And this is pretty high for the Japanese yen because they've done a lot of tightening over there. So 152 is very high for Japanese yen. It's going to come down. It's going to come down when Takeshi gets her way because they'll be printing a lot more yen, which is going to pump our bags. And then the Japanese bond yields are going to come down as well. You see it coming down here already? This is what we want the Federal Reserve to do with our treasury bonds. They want them to buy up the U.S. treasuries to bring their yields down, which will happen eventually. I think it's going to take a long time before it happens, but it will happen eventually. So there's your good news that I promised you here for today, is that we got some easing already occurring over on the Japanese side. They really haven't turned on the money printer full-blown, like, oh yeah, let's start printing money all the damn time. Like, they haven't gone full QE yet, but they're getting pretty close to it. Now, a lot of you might be wondering, especially after seeing Peter Schiff and what he had to say, you might be wondering, well, how is it that, if they're not printing money right now, how is gold at over $4,000 an ounce? A couple of things here we got to say about that. Like, actually, gold's a lot more expensive than $4,000 an ounce. You see, that's paper gold that they're talking about. And paper gold is not the same as the gold that you'd go down to the dealer and buy. Because you want to buy physical gold. If you're going to invest in any precious metals, you want to make sure you get the physical metal. And you want to have a nice place to store it yourself. Because here's another thing. I think what's going to cause people to stop investing in gold and move over to Bitcoin, move over to crypto, is the fact that as the price of gold goes up, the storage fees of gold go up. So while you want your investment to be expensive, you don't want it to be too expensive that the storage fees on it are going to eat away into your investment gains. You don't want that to happen. All right? But here's the deal. Why is gold popping so hard? Why is that? I mean, a lot of people, the narrative you're probably hearing is money printing. But I just showed you, no, there ain't no money printing going on just yet. There will be money printing. But there's not a lot of money printing just yet. The Federal Reserve's not doing any QE. And someone will say, well, it's the debasement trade, which is kind of true. It's not the whole truth, though, because you see, debasement isn't just quantitative easing. There's more to it than that. When the United States has a big balloon go off in its debt to GDP ratio, which it has right now, 120% debt to GDP, that can cause debasement of dollar bills. The DXY is not going to go down so much in that. I mean, the DXY, we saw it just went up today. But when that's going on, when you got 120% gold to debt to GDP ratio, that makes gold an attractive investment, and people go for it. Because they're trying to front run the inflation that they think is going to come. It's also the fact that gold is a safe haven when there's chaos. And the safe haven demand amid the chaos really overrides the dollar strength. I mean, we got an ongoing U.S. government shutdown. We got escalating Mideast tensions. We got a global election jitter with France going down the tubes. That's pushing investors into safe havens. And gold, while it doesn't yield any interest, it shines when uncertainty goes through the roof. Because they think of it as insurance against a black swan event. And also, when there's lots of uncertainty, the dollar itself could be seen as a safe haven. And that's why the DXY is going up a little bit. and how gold can be shooting up so high even while the dollar is getting stronger because people are searching for safe havens. But here's the other thing is the big deal, like why gold is doing what it's doing, is because central banks are buying it. Central banks, especially in emerging markets, are hoarding gold at record paces than they ever bought before. Like over 1,000 tons just in this year alone was purchased by central banks. 1,000 tons of gold, it's a lot. I mean, it's like 35,000 ounces in a ton, I think. So lots of ounces of gold that are being bought. And also remember, gold is priced at the margin as well, like most other financial assets. So each purchase order is pushing the price up. And there's lots of institutional FOMO with that as well. When the institutions FOMO, they take leverage. And there's ETFs that are buying into them as well. So here's like the most important thing to show you about gold, like why it's up. It's not because of dollar debasement or dollar devaluation. It's not because of money printing. This is why. So take a look at China's gold that they just bought. This year, look at all that gold. That's in kilograms, and I don't know the metric system, but over 40,000 kilograms, or up to 40,000 kilograms of gold has been bought just by China. Now, why am I bringing this up here? Did you know this? Gold has outperformed the NASDAQ for the last 5 years. That's right. The NASDAQ, which is supposed to be like the riskiest or the most aggressive of all stock indexes out there. The NASDAQ, it's getting its butt whooped by gold. And we're like, that shouldn't happen. Because gold's supposed to be like this sort of safe, steady, it's a safe haven, steady, stable investment. And it's whooping the NASDAQ's butt. It's true. Look at this here. The NASDAQ is only up 98% over the past 5 years, while gold is up 112%. That's not supposed to happen, you guys. And it's all because of the emerging markets and China buying up a ton of this gold for their central banks. They're ditching the dollar while they do it, too. And also check this out here. Bet we didn't know this here, is that the S&P 500, everybody says, oh, just invest in the S&P 500, get yourself an index fund. And actually, for a long time, I believed that. But then around like 2019, I believed the opposite. Like, oh no, the S&P 500 sucks. You don't want to do that because, like, if you price it in gold, the S&P 500 is actually down. It's down 70% from where it was in the year 2000, at the peak of the at the peak of the Clinton economy. Now, why in TradFi do we typically price things in gold to see this? Like, this is a TradFi thing that we do. We typically price things in gold specifically to purify the gains and appreciation of any inflation and the fact that the price went up just because more dollars were printed. So pricing the S&P 500 in gold, you've lost money. Pricing Bitcoin in gold, you've lost money if you bought the top of the last cycle. So guys, there's no bull run going on right now. I don't care what anybody tells you. Bull run never got started, and probably not going to get started for a while. And I've got some data to show you guys that proves that point exactly. I'm going to show you that when we get back, but first, another little public service announcement. You're listening to a Reinvent Ideal live stream. The phrase Reinvent Ideal isn't just clever wordplay. It's a manifesto. For decades, society handed us a dusty old blueprint for life. Work 9 to 5, climb a corporate ladder, buy a house you can't afford, marry young, pump out kids, spend 40 years in a hamster wheel, and if you're lucky, retire at 65 with a gold watch and arthritis. That's the ideal we inherited, but it's a lie. A boomer-delivered illusion that made sense in 1970. But in today's world, it's a recipe for debt, burnout, and disappointment. Reinvent Ideal is the antidote. It's about rejecting the outdated script and designing a new one. A life where freedom, autonomy, and leverage replace status chasing and financial enslavement. Where your ideal isn't dictated by suburbia and social media, but what keeps you sane, sovereign, and alive. Instead of status symbols, we pursue rare and in-demand skills that buy independence. Instead of debt-fueled materialism, we choose minimalism, shedding liabilities and obligations. Instead of working to death, we embrace crypto and investments that multiply freedom instead of shrinking it. The new ideal isn't about fitting into someone else's mold. It's about building a life that maximizes your time, choices, and sovereignty. Reinvent Ideal is about giving yourself permission to redraw the map. Alright, so I hope it makes sense to all you guys there. If you're wondering, like, why is the channel called Reinvent Ideal? Well, that's the reason why. It's because that's the point of what we're doing here. It's trying to reinvent what is the ideal lives that we should be living here. Alright. Now we gotta get back into the info, but I want to check this out here. Like, Arthur Hayes is somebody that I pay lots and lots of attention to. And he just tweeted something here that I found interesting and related to what we're talking about. Let me pull it up here. If you haven't been reading his Substack, I highly recommend reading his Substack. Because he is ahead of a lot of things. He's ahead of a lot of things on there. Hey, RH Max, how you doing, brother? Good to see you there. So here's what he just tweeted out. He says, the new TradFi meta-narrative is the debasement trade. It took them almost 20 years to notice. Now, the debasement trade, I mean, it's like Cairo's Law. It's basically, when global M2 grows, risk on assets go up. That's the debasement trade. Took them almost 20 years to notice. Don't believe for a second they will forget about it just because of the Bitcoin 4-year cycle. It's time for the banksters to sell gold, crypto, and tech stock derivatives to clients. What Hayes is telling you here is that the bull market ain't over, may not have even started. And this cycle is far from over. And don't buy into the whole 4-year cycle narrative, because there's no way that if they get all 4 money printers going, at all the 4 different central banks, there's no way that crypto either stays flat or starts going down with all those money printers going. I mean, we have a saying in TradFi, we have a saying really in all of finance, don't fight the Fed. You can't win that fight against the Fed, so don't. Don't even try, because you will lose that fight. So there are some people out there that think, oh, well, BlackRock is going to put some shorts against Bitcoin, and that's why it's going to go down even when the money printer's going off. BlackRock is not stupid enough to fight the Fed. So people will just come up with anything they can. They'll say whatever they can here to stick to the 4-year fundamentalism. But, oh well, like if they want to stick to 4-year fundamentalism, go for it. They're going to learn the hard way that it's not the thing. Now, I put up a new thread. I put up a new thread on X for y'all to see here about how the crypto market isn't. It isn't retail's not here yet. Basically, you see, we can have 2 kinds of markets. We can have a top-down market, or we can have a bottom-up market. We usually have a little bit of both at any given time. It's just which one is more dominant. And the top-down, that's when it's mostly institutions, giant whale investors, and the so-called smart money. That's a top-down market. A bottom-up is really, that happens at the height of the bull run, when it's lots of little guy investors that are buying just a little bit at a time. It's the so-called dumb money. We also call it retail investors. And I was told recently in a crypto spaces that, oh, Cairo, you're wrong. retail is already here. Retail is already here, so this crypto cycle is almost over. And if you think that Bitcoin only is where it is at because of institutions, you're just wrong. Well, I did a little bit of research to find out, was I wrong? Because I'll tell you what, like if you disagree with me, step on up to the front of the line. I want to talk to you, and you tell me why you think I'm wrong. I'm happy to listen to why that is. I'll hear you out. But if you are going to tell me why I'm wrong and you're the one that's wrong, I am going to find the truth. So I went searching for the truth, and here is what I found. You want to know why Bitcoin is up while everything else is down? First off, don't listen to Max Kaiser, because what he's going to tell you is that, well, it's because Bitcoin's better. No, it's not that. The reason why Bitcoin is up while everything else is down is because of institutions. Here's the proof. Check out this website. If you haven't seen this website yet, I suggest you bookmark it. It's called bitcointreasuries.net. That's bitcointreasuries.net. And what this shows you here is just the top 100 companies that have Bitcoin on its balance sheet. The top 100 companies that hold Bitcoin on the balance sheet, when you combine all the Bitcoin they own, that's a total of 1 million Bitcoin. There are more companies besides these 100, but the top 100 are they got the biggest chunk of it. It is 1,042,464 Bitcoin held in the top 100 to be exact. Now, with the exception of Strategy, or formerly MicroStrategy, none of these companies existed last cycle, or none of them had Bitcoin on their balance sheet last cycle. Not a damn one of them. These companies just started putting Bitcoin on their balance sheet. Hey, looky here. Rumble Incorporated's got it. I love Rumble. You guys treat me so well. This is why Bitcoin is at 120,000, is because of all these companies that have decided to put it on their balance sheet. And here's the other thing, is that it is projected that this list of companies that have Bitcoin on the balance sheet is going to double in the next 12 months. How are we going to be in a bear market and the price is going to be going down in 2026, like the 4-year fundamentalists say has to happen? How is that going to happen if the number of companies right here that are going to have Bitcoin on their balance sheet are going to double in the next 12 months? All right. And this doesn't even include ETFs. I don't think the ETFs are even on this list here. Yeah, they're not. They're not. There's no ETFs on here. So we take a look over here. I mean, this just shows you like Bitcoin and treasuries in the public companies. 1,045,000 Bitcoin is in public company balance sheet. And then there's another 1.5 million just in Bitcoin ETFs. There is 500,000 of Bitcoin in governments. Some private companies even. Private companies are holding Bitcoin. I mean, the top 100 that I showed you up there, that's just the public companies. But here, they got private companies. 279,000 Bitcoin. Then we got some others in DeFi, smart contracts, and exchanges and custodians. Exchanges got very little Bitcoin. They only got 155,000. The majority of the purchasing going on in the past 2 years has been these companies and these ETFs buying the Bitcoin. It has not been retail buyers, everyday investors that have been buying in the last 2 years that pushed the price up to 120,000. So, all you guys that were in that crypto spaces with me and told me I was wrong when I said it's mostly institutions this cycle, you guys are wrong. And I got even more data to prove my point. I could go on almost another hour if you want me to. I could go on another hour just sharing with you the data that proves I'm right and everybody else that was condescending to me is wrong. I was told that this crypto market is not just institutions and smart money like I say it is, but retail is already here. Well, I was told wrong. Because here's the next thing. Let's go over to Google Trends and take a look at how often is Bitcoin being searched for. Because this was a metric that we used to look at a lot in previous market cycles. Was, what are the search trends for Bitcoin? Because that would tell us, are we at a peak or are we at a are we at a peak or are we at a God damn it, what is the opposite of it? Are we at a trough here? Like, are we at a bull run or are we on a bear run? Wall-to-wall TV, you're wrong, actually. Pulse Chain is not the worst performing L1. Algorand is. And there are plenty of other terrible L1s out there. And also, if you look at TVL, Pulse Chain is ranked 27th out of 400 and 400 and how many? 460. Well, 465. So if you think Pulse Chain is the worst performing L1, I know at least 400 other chains that would love to be performing as poorly as we are. So sorry, wall to wall, you're wrong. Now back to what I was talking about. How often is Bitcoin being searched for on Google these days? Well, we take a look here on this chart. It says that in the November 2021, that was the peak of when Bitcoin was being searched for, which makes sense because that was the peak of the Bitcoin bull market in 2021. And that was also the case in December of 2017 when Bitcoin tops the Google searches for it top. Because you know what I keep saying that everybody ignored me on? And man, it would have been great if everybody listened to me. I said the best marketing is green candles. Green candles will get people searching for it and will get you your parabolic top. And this proves my point. Now, May 2025 is the latest data I could find right here. It doesn't have much recent data. But so far, Bitcoin Google Trends and searches for Bitcoin have not been higher than 40%. They have not. In fact, they've not even been up to 40% yet. And this, I think if I looked at it right now, let me try looking at it right now, see if it has the numbers for, see if it's got the numbers for September at least. I imagine it doesn't have October numbers, but it's got to have September. Let's just type in Bitcoin. Oh, it does have October, and let's see, this was today. Let's look at the past 30 days. Still pretty flat here. Let's look at the trend. All right, here we go. Here's what we want to see. Yeah, I got the latest data from that goes up to May. Let's start it at July and go forward for the rest here. Here's what the Google Trends show. Interest over time in Bitcoin. It was actually a lot higher in July than it was on October the 6th, which was the most recent all-time high. How does that happen? Why does that happen? What was going on? And what day was this? July. Oh, man, can you just make it easy for me to see? July 14th? Yeah, what was going on July 14th in Bitcoin land? Yeah, we did have a pop, but don't think, was that a new all-time high of 119,000? Might have been. Yeah, it might have been there because we did have a pretty decent pop July 14th of 2025. But interest was higher at 119,000 than it was at 126,000. So that tells me it's not over yet, guys. It's not over here. Because look at this. The Google Trends, it says it's down. Why would it be? If the Google Trends are down from where they were in July and the price is higher than it was in July, how can you say that the retail interest is here? What pushed the Bitcoin price higher now than it was in July? Because you see, institutions, they're not searching for Bitcoin on Google, okay? They search it on Bloomberg, not Google. They're not typing in, what's this Bitcoin thing? It's retail people that do that. And so if retail people aren't doing that, we're just not in a bull market top yet. Yeah, I got another thing here to show you, another metric that we can look at. To tell you, is retail here yet? And what that is going to be the ranking that Coinbase, the Coinbase app has in the app stores. So the higher the ranking, the worse off it is, because or the higher the number, the worse off it is. Because you see what this is saying here is that in 2017 it was ranked number one, and in 2021 it was ranked number one. But so far in 2025, it has not been ranked number one. It hasn't even been ranked 120th. That doesn't happen at the height of a bull market. At the height of a bull market, the Coinbase app ranking in the App Store is at least in the top 10. So right now, it's muted in comparison. All right. So app downloads and platform engagement as well is another thing we can look at. 2021 Coinbase was ranked number one in the Apple App Store. And that was during peak FOMO. And the downloads were surging like 200% month over month. The Apple Store has that data that we can look at. 2025, Coinbase is just at number 260. Even while Bitcoin pushed past 120,000, Coinbase is still only at rank 260 in the Apple Store. That tells me not a lot of people are looking to get into crypto right now, not a lot of retail people. So all you guys that condescended to me in those spaces, you're wrong. There's my proof. I'm right. I'll accept your apologies now. There's also some on-chain and trading metrics that we can look at. According to Glassnode data, the retail size transfers, which they rank at 10,000 or less, and the new small holder addresses, they did grow between the years 2023 and right now, 2025, but at a much, much slower pace than it did in 2021. In 2021, there was like a 300% surge in retail size transfers and in small holder addresses. 2025, though, retail demand actually hit a 2-month low in September. I mean, it was down 5% over 30 days. And even with ETF-driven highs, which is a divergence that we didn't have in past retail bull runs, even with that, retail demand hit a 2-month low in September. The top is nowhere near. It's nowhere near in yet. All right. There was also some other reports talking about on-chain ghost towns for speculators, and most speculators are talking about retail because the institutions, they don't speculate like that. So it's very selective participation going on. And it's like I said earlier, the economy really sucks right now, so nobody's thinking about investing in crypto. So while the user base has expanded, there's a lot more people investing in crypto right now than before. The dumb money is not here yet. Retail, the frenzies that they cause, that amplify bull runs as we know them, bull runs in the past, those investors aren't here yet. They're absent right now. It's mostly institutions carrying the load. So that's how you know this isn't over. Because does the smart money buy at the height of the cycle? Does the smart money buy when there are no retail to sell to? Do the institutions, are they in the business of losing money? Do they buy the top and then when it starts going down, they sell? No. So the smart money buys to later sell to the dumb money that's coming in. So I'm right. Everybody else is wrong. This is why you should only listen to me and only watch my streams. That wasn't the only thing that I wanted to complain about, though. That wasn't the only thing that I got lectured on this past week. It's not the only thing that people ran me up the flagpole for and said, oh, you're wrong. I also got lectured about liquidity in the markets. I got told, oh, there's plenty of liquidity in the crypto markets. You just don't understand this market. In fact, one guy actually told me that he wouldn't take me seriously unless I bought Binance Pro so that I could see all this stuff. They say, you're disconnected from the market unless you get Binance Pro. I got a Bloomberg terminal. I think I got access to more information than you, bro. Okay? Getting angry Cairo fired up back up here again. Angry Cairo's getting back on the case. But there's something here that tells me that, yeah, that person is wrong because liquidity across the board in all markets is down, and here is my proof. It's not just the crypto market, it's all markets. All money in the world, liquidity is down. Because remember, 3 of the 4 big central banks are doing tightening. Put a lot of focus on the Federal Reserve, and I put a lot of focus on them for good reason, because the United States, the U.S. dollars is the world reserve currency. So because it's the world reserve currency, anything that is going on at the Federal Reserve carries a lot more power. Now, something very interesting is happening at the Federal Reserve right now. You see, reverse repo markets. I generally didn't want to talk about this here just because of like how messy treasury repurchase agreements are and then reverse repurchase agreements are, and a lot of people's eyes are probably glazing over as I say those words. Matter of fact, like, if you're a person that likes to get laid and have sex, there's a good chance you don't know anything about this, which, man, it's fine. But let me tell you this here. I got to give you a little caution before I get into talking about reverse repos. If you're ever at a party and you're talking to a girl and you're hoping to get lucky that night, do not talk about reverse repos, because it guarantees you will not get laid. It guarantees that you will turn her off and she will never want to talk to you, never want to sleep with you, because that's how boring reverse repos are. But for the purpose of your financial literacy and crypto education, let me share with you how reverse repo works. You see, what it is it is the safe cash parking lot at the Federal Reserve that banks can use when they want to store some cash at the Federal Reserve Bank and collect a little bit of interest. Very easy interest. Because what these are is these are overnight loans, the reverse repos. And it's all T-bills. That's all that it is. But reverse repo usage has gone down hard. It was 2.5 trillion back in January 2023. Now it's all the way down to 4.6 billion. And that's the lowest it's been ever since April 2021. But what is reverse repo and why does that matter? It works like this here. See, reverse repo, it's just a temporary place, kind of like the Airbnb for bank cash. Airbnb. I can remember the old days of Airbnb, like you got on a flight, traveling somewhere, and you just needed a place to stay for one night. Well, you got an Airbnb because back in the old days it was cheap. It's not cheap anymore, but back in the old days it was cheap. The Fed's got something like that too, where banks can park some excess cash on hand for just one night. And that's a reverse repo facility. Money market funds use a lot of this here. See, money market funds, what they're going to do is they're going to lend their dollars to the Fed, and they're going to receive treasuries from the Fed for those dollars, and then the money market earns interest, and that's how the money market pays interest to the depositors. But you can think of it also as like Wall Street's version of risk-free savings. Now, between 2021 and 2023, this is what the trend had been in reverse repo land as far as deposits being made into it and extractions coming out of it. And I'll tell you like why this is important here. I know that you're falling asleep and you're going, oh, Cairo, why are you talking about this? I'm never going to get laid if I know this information. You'll still get laid. You just got to keep this information to yourself. I promise you. But between 2021 and 23, this facility got real big here. It went all the way up to 2.5 trillion. And that was a function of the Fed finally starting to do quantitative tightening. That was a function of higher interest rates. When the federal funds rate got raised all the way up to 5.5%, that made reverse repo more attractive for banks to put their money. There was also a lot of pandemic stimulus that flooded the financial system. The banks were drowning in deposits. They had more money than they knew what to do with. Money market funds didn't have anywhere safe to park the cash, so they parked it with the Fed at the reverse repo facility. That's how it got to 2.5 trillion. Now, what happened next is this. We take a look at reverse repos and the trend that occurred when they started tightening. That whole mountain of cash they had, 2.5 trillion, it just disappeared. I mean, not all of it. There's still 4.6 billion left, but it's almost entirely gone. To go from 2.5 trill to 4.6 bill. I mean, remember like when FTX collapsed and Sam Bankman-Fried's net worth went from like a couple $1 billion down to 100,000? That's pretty traumatic. I mean, yeah, he still got some money, but that was an amazing loss that he had right there. So trillions of dollars have left the Federal Reserve, and those trillions of dollars are being pulled into markets, being pulled into bank deposits and day-to-day funding needs across the system. And before, much of that cash flowed into treasury bills. The yields climbed up because of it. And now, like a 3-month treasury bill is like 3.9%, which is below the Federal Reserve's 4.25% for reverse repo rate. And what this means is that the mass exodus isn't about yield anymore. It's about tightening liquidity. So like all this money was extracted from the Fed, probably because the depositors who deposited the money originally want their money back because the cost of living has gone up so high, they got to pay for it. So the depositors are taking their money out of banks. The banks got to take the money out of the Fed's reverse repo and give it to the depositor who's now withdrawing. And the person who deposited and is now withdrawing uses it to pay bills, and the money's gone, and there's no liquidity now. Because liquidity is dying in this process. And you guys always see me bring this chart up here about the Federal Reserve balance sheet and everything. But here's the deal: is like the system is running out of excess cash. Treasuries that are being issued, and then the tax flows that are coming out, the quantitative tightening. All it's doing is pulling dollar bills out of circulation. That's what's happening. And money funds, they no longer have trillions that are just sitting around as idle cash to lend to the Fed overnight. Liquidity is down across the board, even the banking system. And we also see this happening with the Fed's balance sheet itself, because it shrunk from 9 trillion to 6.6 trillion just recently. And every month, treasuries, mortgage-backed securities are rolling off the balance sheet and maturing and not getting replaced. Now, with the reverse repo facility being drained and the quantitative tightening continuing, each dollar of tightening is reducing bank reserves further and is far more devastating to U.S. liquidity. It's a lot more devastating. So here's the thing about it like this here. Like, say we got a kitchen sink. Like, it's right back in the old days. You used to wash dishes in the kitchen sink. You would have a plug. You'd put the plug in there to plug the drain. Reserves, cash reserves are water in this analogy. Quantitative tightening is the drain. And the reverse repo facility would be a spare bucket of water that you had right next to the sink on the side. It's like once it starts draining and you want to refill it. Well, now the bucket is empty. And the water in the sink that's going down the drain, it's a lot more devastating now. A lot more devastating in the sense that that water is disappearing because you don't have a bucket on the side of the sink that you can pour into the sink to refill it. That's what's happening with each dollar of quantitative tightening that occurs. It's a lot more devastating to liquidity now. Now, here's a little bit of history here on why this is important. The overnight repo rate, this is a big deal. What happens with the overnight repo rate? Excuse me. The Fed, in 2019, they let reserves fall too far. And the repo rates spiked up to 7% overnight, which is this blip on the chart here that you can see. When that happens, well, we got a big problem. Like the markets froze up, and the Fed had to immediately eject liquidity in like an emergency injection. They were doing quantitative tightening at the time. They had to stop it. They had to stop it right away and do a little bit of easing. And you might notice, like back in the charts, because this is Cairo's law, Bitcoin was going up a little bit in 2019. We had a really nice trend going on. That was because of the emergency liquidity and the quantitative tightening halt that the Fed did in September of 2019. All right. The risk that we faced back then in September of 2019 is coming back. This time, though, the Fed does not have the bucket of water of spare liquidity that they can pour in to fix a overnight repo rate spike like they had faced back in 2019. So it's a really big problem for the Fed, but it's a big problem that's really good for your bags. And here's some more on that here. Because you see, when the bank reserve, if it slips below 3 trillion for like overall banking, like bank reserves for banking nationwide, when that slips below 3 trillion, and which was as low as it got back in 2021, I think, we get a spread between two yields. So you see right now, like this chart here is showing us September is where it cuts off at, September of 2025. When it slips below 3 trillion, like it just did, we got there pretty close before in like April of this year. But when it goes below there, they got to inject emergency liquidity. Because what this does is this creates a gap between SOFR, or the Secured Overnight Funding Rate, and the federal funds rate. When there's a gap, when there's a spread between the two, like there is now, which is the widest that it's ever been, that's a clear sign that liquidity is dry. It's all tightened up. When the spread widens, the funding stress is already building and getting worse. And when the SOFR, the Secured Overnight Financing Rate, trades above the federal funds rate, it means cash is very scarce. The money supply is more scarce than it was before. And that's a function of quantitative tightening. And they're not burning dollar bills, but it's just like burning dollar bills, it's like throwing money on the fire. Banks are paying more to borrow money overnight. Collateral is harder to find. Funding markets are tightening. And it's one of the earliest signs of liquidity stress in the financial system. It's a big problem. And see, this is the spread between the two yields here. You got your secured overnight financing rate and the IORB, that's the interest rate on reserve balances. When that spread widens, meaning when this, look at this sort of EKG looking chart, when it goes up, when it pops up here, that means there is a glorious lack of liquidity in the financial system. And it's not just in banking. It goes all across the board. That's a lack of liquidity in stocks, which is probably why stocks are popping off so high. That's a lack of liquidity in crypto, which is why I said in a crypto space is, hey, when I look at the market as it stands right now, what I see is a market that's starved of liquidity. And a bunch of people laughed at me and ran me up the flagpole saying, oh, you don't know what you're talking about, Cairo. I'm like, oh, no, I do know exactly what I'm talking about. And unlike you, I got the facts on my side. Because markets are running without the $2.5 trillion Federal Reserve safety buffer, that bucket of water that they could keep. So liquidity is stretched really thin all across the board in all markets. Even routine events like auctions or important tax dates could spark severe volatility. There's no shock absorber right now in the system. We're okay for now, but we're just one funding squeeze away from trouble. Only takes one thing to go wrong to cause all sorts of chaos in the markets to the point where the Federal Reserve is going to have to step in. Going to have to absolutely step in that case. So those were the main things that I wanted to talk about today. Here was to get a lot of my anger out of me, but there's a few other things here that I think is worth us talking about and worth sharing with you here. Over at Milk Road Macro, they made an amazing discovery about Ethereum. Amazing discovery. If you haven't seen this before here, I think this will put a smile on your face. Did you know, there's a lot of correlation, of course, between Bitcoin and the ISM, between Bitcoin and Global M2, and there's a lot of correlation between Ethereum and that. But did you know that Ethereum and the Russell 2000, small cap stocks, it has almost perfect correlation. When the small caps go up, Ethereum usually follows. And let's see, I'm not sure how much of a lag there is in that, but you can kind of see there's a lag there because the Ethereum is the purple and the small caps is the green. There is I think it's probably a 2-month lag. So watch that Russell 2000. When that thing goes up, that's how you know Ethereum is probably going to be surging shortly after, and that's when we could get our alt season. I think that doesn't really start though till Ethereum hits $5,000. So Russell 2000 and Ethereum, they're the same thing because they have the same type of reaction to growth in global M2, and they also attract the same kinds of investors, very high risk tolerant investors that go for these two. More data that proves my point that not only has the bull run not even begun, but the bear market hasn't even ended. Just look at this here. The MVRV Z-score, which is a market value to realized value is what it stands for. When you look at our current cycle, it is nowhere close to the tops. All right, because you look at realized market cap, that's right here. And market capitalization is up here. But when you compare the two of them together and give them a Z-score, they are nowhere near the top, nowhere close enough. All right, and Z-scores, it's a very messy thing to get into here. I don't think I can get into it without a whiteboard. But what this tells you is that, yeah, the top is not in. We still got a lot of time ahead of us here. All right. That was everything I had to show here for you for today. Let's see. Did we get any questions in the chat here? No, we got a lot of trash talk, but any questions? Let me go back through it here, guys. If you got questions, now's the time to throw them in. Hex Wizard says ETH will be 6,000 or 7,000 by Christmas. I hope you're right. The fundamental, NJ Dub says, the fundamentals of this ecosystem is probably one of two reasons why anybody's still here. Second being a benevolent billionaire founder. Maybe. Any questions? Hex Wizard 369 says the emergency end staker type person will lose in crypto. That mindset will never win unless they EES because of an emergency or something to that effect. Yes, I agree with that. Good Times in Gold says would be cool for you and access to chat and see where you agree and disagree. Yeah, I'd be down with chatting to access or access. Hex Wizard asks, does the book come with a pair of yellow sunglasses? Need some of those. No. These, like if you watched wrestling back in the 90s, like I got these here just because Jeff Jarrett used to wear these. Not that I like Jeff Jarrett, but I like the glasses. Chris B says, Peter Schiff, or I sold Peter Schiff 100,000 in metals that was delivered to Schiff Gold today. As soon as the wire comes through for payment, I'm going into the precious metals miners. Don't think we got any questions here today. All right, so I'm going to take it as I've done such a great job in all this streaming and educating you guys here that you all are as investment literate as I intended for you all to be, and you all know exactly what is going on. And because you all know exactly what is going on, you don't have any questions to ask me and everything. That's how I'm going to take it. So, hope that this clears up a lot of information and misinformation that has been going around the crypto spaces lately here. And when you see any misinformation, screenshot it and send it to me, or just post a link to this stream under that misinformation. And hopefully we can get it all cleared up, get all of the weak hands and wimps out of our ecosystem, and have nothing but strong hands left. That's all I got for today.
That is it for us today, you glorious degens. Smash that subscribe button to join the rebellion, and follow me on X at Reinvent Ideal for more unfiltered truth bombs between live streams. And if this was your first time listening, head over to reinventideal.substack.com, because I have a free gift waiting for you there. If you become a free subscriber, you'll get a free copy of my book, Your Parents Were Wrong, Debunking and Replacing Outdated Advice, packed with the wisdom to outsmart the system. It's absolutely free to join, so no excuses. Grab it before the suits catch on. And remember, the bears get blocked right here and told to shut the FUD up. Until next time, this is Cairo Copeland, your millennial Moses, here to lead